Welcome, ladies and gentlemen, to Commodity TV and Mining Newsflash with Aztec Minerals, Bluestone Resources and EnWave Corporation. It's getting really exciting here. Aztec Minerals and Kootenay Silver are planning a 1.13 million Canadian dollar worth two-phase exploration program at the Cervantes porphyry gold-copper project in 2021. Aztec and Kootenay formed a joint venture recently where Aztec holds 65% and Kootenay has 35%, and they approved a Phase 1 and Phase 2 exploration program for 2021. The joint venture plans to begin work in Q1 and a soil and rock sampling and geological mapping program valued at 85,000 Canadian dollars to extend the 100-meter by 100-meter geological and geochemical grid to the north, west and east of the property. 525 soil samples and 150 rock samples will be analyzed. The mapping will focus on detailed lithological, structural and alteration mapping of the California North and Estrella targets. Subject to Phase 1 results and available funding, the joint venture plans to initiate a Phase 2 RC drilling program with 22 holes and 5,000 meters valued at 105 million Canadian dollars later this year in Q3. 4 main targets will be tested. Aztec is really getting started here and we look forward to the results. Bluestone Resources announced the current status of corporate activities in 2020 and further planning for 2021 on their Cerro Blanco gold mine. During 2020, a project readiness update called PRU was conducted, which included a thorough and comprehensive review of the current mine plan, engineering, process flow diagram, capital and operating cost estimates, and execution strategy. The PRU will be further optimized in the first half of 2021 following the completion of an updated mineral resource estimate and mine plan to include the recently completed 2020 drill program. Bluestone made giant strides last year in project development. It secured a $30 million credit facility with Natixis, which is also one of the lending banks in the project financing. Several key optimization and trade-off studies were completed, and Jack Lundin from the Lundin family, which is the largest shareholder in the company, was appointed as CEO. The successful completion of a 92 million Canadian dollar equity financing last year has left the company still in a very strong position with $50 million in cash remaining today and has allowed it to aggressively develop the mine. Technical, environmental and social due diligence for the project finance banks has been completed, as well as the base engineering study and a successful 15,000 meter plus infill drilling program that yielded the highest grade intercept ever measured there with 1,380 grams gold and 2,194 grams silver in the project. Bluestone remains cheaply valued and we see enormous potential in the share price. Important to note are the results of the PRU for the project while the feasibility study is ongoing. Further optimization of the mine plan is expected in the first half this year following an updated resource estimate. The mine plan review to date, as well as the decision to purchase the mobile fleet during construction, combined with the additional basic engineering details, are expected to result in a moderate increase in capital and operating costs compared to the feasibility study. However, the impact of an increased gold price, additional recoverable ounces and other optimizations are expected to offset, resulting in robust project economics in line with the feasibility study. The PRU highlights below were calculated in the base case scenario using a gold price of only $1,500 per ounce and a silver price of $20 per ounce. Average annual gold production is consistent with the 2019 feasibility study. The project is at the low end of the lowest quartile of the global cost curve, with average life of mine costs below $675 per ounce net of byproduct credits. Average annual free cash flow is $85 million over the life of mine. The after-tax internal rate of return, the IRR, is approximately 30%. The net present value at a 5% discount rate is expected to exceed $300 million after tax. Initial capital is approximately $225 million, including pre-production revenues, with an after-tax payback period of less than 3 years, and is expected to produce approximately 1 million ounces of gold and 3 million ounces of silver. These are great numbers for Bluestone, and we are assigning an initial price target of $5 Canadian for the stock. EnWave Corporation announced that US pharmaceutical giant Merck Co has published a research article citing EnWave's freezeREV process as a viable manufacturing alternative to vial-based lyophilization for vaccines and biologics. The research article, titled Evaluation of Microwave Vacuum Drying as an Alternative to Freeze Drying of Biologics and Vaccines: The Power of Simple Modeling to Identify a Mechanism for Faster Drying Times Achieved with Microwave, was published in the 19th January 2021 issue of citing, the official journal of the American Association of Pharmaceutical Scientists. Merck's 9-month evaluation used a lab-scale freezeREV device manufactured by EnWave specifically for dehydrating pharmaceutical products. The objective of the study was to determine the uniformity and repeatability of microwave vacuum drying in drying liquid vaccines in vials. This evaluation is the first of its kind to scientifically document the effectiveness of microwave vacuum drying, more specifically freezeREV, for drying vaccines. Startled by Corona, the pharmaceutical industry is now moving full steam ahead to find stable and easy storage and transport options for vaccines of all types. Merck has been a research partner of EnWave since 2015. The company continues unwaveringly, meaning EnWave, on their path and is very well positioned and, in our opinion, has a lot of potential on the way, especially in COVID-19 times. My team and or myself are or may be shareholders of the companies presented, and they are or may become part of the SRC Mining Special Situations Certificate. Thanks for watching us, and bye-bye from Switzerland.